This reversal point here gives you a key resistance level. Price makes a higher high, whereas the stochastic makes a lower high, giving you a divergence. Once price broke the neckline and made a lower low, you would look for short entries. Now, moving on to regular divergence in a downtrend. Before we continue, we want to hear from you. Tell us in the comments below right now what video topics we should cover next. As always, please hit the like button, as it allows for our team to continue to produce more free videos on YouTube. You have a moving downtrend. Price then starts to swing, showing a loss of momentum from the sellers in the market, and that the bears are no longer in full control. Price makes a lower low, whereas the stochastic makes a higher low, which is a divergence in direction between price and the indicator, which triggers a reversal upwards. Now, as always, you need trend change price action after the divergence forms, or else you can get a slight pullback and price can continue on downwards after. So here was the trend change price action you got. This reversal point here creates a resistance level. Once price breaks through the resistance level and makes a higher high, this invalidates the resistance level and confirms the divergence is complete and real, and is your trend change price action confirmation, and is then when you would look for long entry points. The second trend change price action you could have used is trend line placed like this, connecting the swing highs. And once price broke the trend line, it confirms the divergence and is then when you would look for long entry points. So let's dive deeper into why you have to wait for the trend change price action confirmation. You have a moving downtrend. Price makes a divergence, but without trend change price action, you get a slight pullback before price continues on downwards. Then you have a divergence again. Trend line connecting the swing highs. Once price breaks above the trend line and makes a higher high, this finally confirms your divergence is real and valid, and is then when you will look for long entry points. Let's show this again. You have a moving downtrend. Price makes a divergence, but without trend change price action, this leads to a slight pullback before price continues downwards. It's not until you have this higher low form, followed by a break of the trend line and higher high, that then validates the previous divergence. This is called a delayed divergence confirmation and presents long trade opportunities. So moving on to tight divergence. This here is tight divergence because the swings of price are very close together and can be harder to identify to the untrained eye. If you're just starting out and finding it hard to identify tight divergence, convert your candlestick chart to a line chart. Now, you can then clearly see price making a lower low, whereas the stochastic is making a higher low, which is divergence. Again, in terms of trade quality, wide divergence is a higher quality trade setup, but tight divergence is still highly effective when used correctly. Let's now combine divergence with key levels for higher quality reversal trade setups. This reversal point here gives you a key support level. Price makes a lower low, whereas the stochastic makes a higher low, giving you a divergence. Trend line placed above, and once price broke the trend line and made a higher high, the trend change is confirmed, and is then when you would look for long entries. These reversal points give you a key support level. As price comes back down, it makes a lower low, whereas the stochastic makes a higher low, giving you a divergence. Trend line placed above, and once price broke the trend line and made a higher high, trend change confirmed, and is then when you would look for a long entry point using our entry strategy. Now, moving on to hidden divergence, which is used for continuation trades. Starting with hidden divergence in a downtrend. You have a moving downtrend. Price makes a lower high, whereas the stochastic makes a higher high, which is a divergence in direction between price and the indicator. This signals a possible trend continuation downwards is coming after the current pullback. As always, you need trend change price action after the hidden divergence forms. This reversal point here creates a support level. Once price breaks through the support level and makes a lower low, this invalidates the support level and confirms the hidden divergence is complete and real, and is your trend continuation price action confirmation, and is then when you would look for short continuation trade entry points. Now, moving on to hidden divergence in an uptrend. You have a moving uptrend. Price makes a higher low, whereas the stochastic makes a lower low, which is a divergence in direction between price and the indicator. This signals a possible trend continuation upwards is coming after the current pullback. To take this up a notch, this hidden divergence is also occurring at the key support level, which makes this a very high quality long trade setup. Trendline placed above, and once price broke the trendline and makes a higher high, this confirms your hidden divergence is real and valid, and it's then when you would look for a long entry point using our entry strategy and key tool.